Hello, good morning to everybody. Looking forward to having an amazing conversation, really talking about what new financing mechanisms we're bringing to scaling climate, smart technologies, and particularly across the emerging markets. So I would love to take a quick moment to allow our panelists to introduce themselves, and then we'll jump right in. So I'll start with you, Jonathan.
Thank you, Courtney. So I'm Jonathan Berman. I'm the CEO of the Shell Foundation. The Shell Foundation is an independent philanthropy founded with an endowment from the Shell Group 25 years ago. And our mission is to raise incomes while lowering emissions on a commercial basis. I'm sure we'll talk a lot more about that.
Amazing. Astria, good morning to you. Share a little bit about yourself.
Good morning, Courtney. Good morning, everyone. So my name is Astria Fataki. I am the strategic lead for Timbuktu. Timbuktu is a flagship initiative from UNDP, the United Nations Development Program. And our objective through this program and platform that Timbuktu is to support startup and entrepreneurship across the entire African continent and to support up to 1,000 startups to reach scale by 2035 and to mobilize $1 billion to support this ecosystem grow over the 10 next years.
Incredible. I love the focus on startups, and I'm sure we're going to talk a lot more about that. Marlène, good morning.
Yeah, good morning. Thank you very much for having us. Good morning, everyone. My name is Marlène Ngoyi. I'm the CEO of FEDA. FEDA is a billion-dollar investment fund, the impact investment arm of Afrexim Bank, which is a large multilateral focusing on Africa. And what we do is equity, quasi-equity investments across many different sectors in Africa. And I'm excited to speak to you about what we do in e-mobility.
Amazing. Well, perhaps we'll start the conversation a little bit broadly and maybe observations in terms of what you're seeing right now across financing mechanisms, and in particular, how the Shell Foundation has really come to hone the mechanisms that you're deploying and investing in today.
Yeah, so as I mentioned, our organization believes that in order to lower emissions, you need to raise incomes for people, and it needs to be on a commercial basis so that you are also creating income for companies and for investors, right? So to that, and without that, the entire endeavor is not sustainable. So to that end, we've leveraged some $10 billion in capital since inception. We do that through deploying our capital through grant, debt, equity, and guarantees, and other forms of concessional finance. And that's the biggest. That's the first point that I would make, is that you might wonder what's the role of philanthropic capital in making returns, and from our perspective, a proper role of philanthropic capital is de-risking the pre-commercial, de-risking what's new in the marketplace. So new customers, new technologies such as involved in the green transition, new markets. Many of the investors that we work with are first time in emerging markets where we've been there 25 years. So for us, it makes sense to de-risk those early steps so that projects and products can eventually become commercially sustainable with no philanthropic support.
Yeah. And tell me, I mean, you've been doing this a long time and developed a real expertise. Have you seen these mechanisms or the funders or participants of the products that you all are using change over time?
Yeah, so I'll limit myself to the 3 years that I've been the CEO of the foundation. Even in that time, we've seen a change. So we've seen both large global corporates come into the space, as well as significant regional leaders. So in Africa or in South Asia, which is the two regions in which we're active, we now work with the largest agribusinesses, the largest distributors of generators in those regions, which are is a piece of critical infrastructure for almost every company. Now involved in blended finance structures, where they were new to that a few years ago. Even regional banks, which are key to creating the access to finance necessary, for example, for a farmer to buy a solar pump, or for the millions of people driving two-wheel vehicles to buy an electric vehicle for the first time. Those regional banks are also new to blended finance, and we're doing the first deals with them and leveraging our experience to walk those critical players through that process.
Amazing, amazing. And Astria yourself, I mean, Timbuktu is such a unique initiative, and UNDP has long been a player in all sorts of really critical needs and financing around the world. And what was it like to see the initiative formed, and how did you choose the way in which you were going to structure and finance the outcomes you were looking for?
Well, thank you for the question. So, UNDP stands for United Nations Development Program, but for me, the D stands for dignity and dignified life. And so this is one of the key mission of UNDP, and that's the reason why we wake up every day. It's to make sure that everything we do allow a maximum of person to live a dignified life. And so Timbuktu is actually a reform agenda because in the world we live in, the geopolitical situation that we are facing, development cannot be implemented the way it was done 60 years ago when UNDP was created. We really need to have a new way of proposing a way to dignified life, and entrepreneurship can be a very strong way to leverage, let's say, the positive side of capitalism towards this objective. And so Timbuktu has been really structured to be a platform because we operate in an ecosystem where the players are a little bit siloed and a little bit scattered. And even in terms of financing and de-risking financing, what we've realized is that sometimes the communication between the different players on the ecosystem is a bit limited. And so Timbuktu is really designed in the way to connect the different players across the continent so that we can really create a true African market. Because with the IFCTA, Africa is going to be the largest consolidated market in the world. So we really want to leverage that. And so in order to do so, we created 10 different hubs in different countries. Those hubs are thematic, so going from agri-tech to green tech to health tech, fintech, mining tech, so sectors that actually needs to be boosted in terms of entrepreneurship and also financing, because those sectors, they are not the most glamorous one, if I can say so. For example, when we look at the funding in the startup ecosystem, fintech is still the first one to receive funding, and though it's necessary and services are necessary, especially when it comes to banking, it's hard to develop a continent without those really core and basic industrialization type of innovation. And so that's why we really invest in those space, and we invest in talent, because at the end of the day, Africa is one of the youngest continents on the planet, lots of talents, but those talents need to be cultivated further and structured into bankable projects, bankable startups that can actually grow. And so we are working closely with players like 500 Global, for example, to structure acceleration programs that can help doing so. And that's actually through this partnership that we also collaborate with the Shell Foundation to really nurture those talents towards investable startups.
Yes, yes. And actually, for our audience here and also watching online, could you just share a little bit about the significance of what's happened with the IFCTA? Because I think it's kind of under discussed in what a bold and important move this is to be able to continue innovation and financing at scale on the continent.
Yeah, absolutely. Because when we look at the innovation space and the entrepreneurial space in general, the bigger your market, the better somehow. And the truth is that so far the African market has been very compartmentalized, and I think for outside observer, Africa is this huge country, but really it isn't. It's a continent with 54 different countries. I'm sure everyone here have seen at least this map of Africa that actually contains many continents, Asia, Europe, all together. And so with the IFCTA, we are now in the phase where we are really integrating this market. That will very much be the European Union, let's say,
Yeah.
of Africa. And this allows us, and that's why we have those hubs. Each of those hubs that I mentioned earlier, they are thematic, but they are Pan-African. So when we work with, let's say, an agri-tech startup, we are setting them up to scale across the continent. And so they can really, we have this soft lending approach. So it means that a startup that is like a Zambian startup that is working on a green tech technology in Nairobi has actually a place to lend in, let's say, Dakar, if this market is relevant for them. So, and the fact that now through the FCTA, we have tax disposition that really allows funders to move across. We also have a lot of facilitation, business facilitation services. This makes it even more possible.
Amazing. Thank you for sharing that. Marlène, I would love to hear a little bit more. Could you just share with the audience on the history, the development of FEDA, and then in particular the work you've done in infrastructure, because it's such a big component of climate financing at scale.
Thank you very much. So I say, so FEDA was actually was born out of Afreximbank, which is the second largest multilateral based in Cairo, but obviously serving all of Africa. We have a $45 billion balance sheet started 30 years ago with 100 million. And at first, Afreximbank was focusing on trade finance, so very short-term solutions. Then the bank evolved into doing more medium-term financing and loans. And in 2019, they realized for the type of ambition that we have on the continent, and my co-panelists mentioned the AFCFTA, the Africa integration, more and more you have national businesses that want to go regional, that want to be Pan-African. For that, they realize you need capital, big capital, but you also need patient capital. So you cannot be ambitious and be pressed about repaying your loan or your interest expenses the next month. So there was a need for equity. And so when we calculated it, we realized that the continent was really underserved in terms of equity. Beyond just the patient capital, there was also a need for governance, having strong boards, having partners that can link you up to markets, that can link you up to customers, suppliers. So that need for equity and the governance that comes with it was very important. So Afreximbank was very ambitious, and they said, let's start FEDA. Let's have FEDA, and let's invest money off of our balance sheet. So to date, FEDA has invested, we're at $1.3 billion that we have invested in equity, quasi-equity. So that's a bold move. So that's a bank that has a 45 billion balance sheet, but wants to be transformational and saying, before we raise money from others, let's build a portfolio rather than asking people to invest based on our hope and dreams. Let's build a portfolio. Let's prove our thesis. And so we created the fund with three objectives. We want to industrialize Africa. We want to make sure that when Africa exports to the rest of the world, it does so with value add, so value add export development. We do not want to see the exports of raw commodity to the rest of the world. We want to create wealth in Africa, so we want people to have nice paying jobs. We want people to have transfer knowledge. We want businesses to be thriving and pay taxes to support social services. And so that's very important to us. And the third angle is the one that you mentioned there, which is promote intra-Africa trade. We realize that when we trade with each other, it's with a higher value add. That's a humongous market. That's the whole appeal of scales. And so that's something that we very much want to promote. I'm very happy to say that FEDA is also the fund manager for the AFCFTA fund in collaboration with Afrexim and the AFCFTA Secretariat in Ghana. So that's the idea behind FEDA. We have been very bold in our investments. We have invested more than $500 million into Arise IIP. Arise IIP is an infrastructure play that's very important. It's industrial parks in Africa that essentially provides entrepreneurs with land, OEM services, logistical services to allow them to come in, plug and play, produce with value add, exports with clear logistical route to do so efficiently. And then we have ecosystem within the zones where one company might be the supplier of another, and so on and so forth. And so we've been able to transform timber in Gabon that used to be exported raw log. Now is being transformed, that has tremendously transformed the timber industry and what it contributes to the country. We have done the same in Benin with cotton, where raw cotton is now being transformed in Benin, and you can buy T-shirts at children's plays in the US, etc. That's the type of things that we want to do. We're doing the same with meat in Chad, and many different verticals that are well studied, where we have a comparative advantage. So that would be one example, but we have invested in the refinery of Cabinda in Angola. Again, the idea was to say we cannot be exporting raw crude and re-importing processed oil. It doesn't make sense for an environmental climate perspective, doesn't make sense for a development value perspective. Let's do it in-house. We are, like I said, just doing many other things, but I'll stop here for now.
Thank you.
You know, as Astria and Marlène speak, I realized that you asked me, who do you see that's new in the ecosystem? And we spoke a bit about that. But it's also who you're doing business with. Blended finance makes for unexpected bedfellows. So, if 2 years ago you had said to me that I would be in a deal with UNDP, I would have been surprised by that comment. And yet, just last month, we signed a deal, as you know, with UNDP to support climate innovation across the global south. And when I sat with Astria and her team in New York, what I found was, as I told her, it's not my grandfather's UNDP, right? They're much more commercially minded than I had understood them to be. Very savvy on the facts and on the nature of innovation. And then, as we were wiring up in the green room before this meeting, I found that Marlène has just invested in an entity that is before our investment committee now. So you can hear that obviously UNDP has a strong humanitarian brand, right? And FEDA, as you can hear, is deeply commercial in its orientation, and we sit astride those worlds. And what you find when you get into blended finance is that you're working across those.
Yeah. No, I think that's such a great point to make. And as 500 Global is a firm that started in venture capital, today sitting up here with all of you now talking about the way climate financing is changing, particularly in emerging markets. 5 years ago, I don't know that would have been the case. And I believe that's also one of the really exciting things that we're seeing is so many partners coming together that previously would not have been a part of this world. Jonathan, just maybe, I know you sit on several boards. I'm curious, from the investment perspective, tell us some lessons that you've learned related to large-scale climate financing.
Yeah, so the boards I sit on are both operational companies and funds or fund managers, right? And so the first thing I would say is that at both levels, at both fund level and at the company level, commercial viability has to be key, right? You have to remain commercial, and it's hard in light of the sort of dual purpose mission that we all share and that represents blended finance. But it is a absolutely critical discipline to the future of the sector, right? And you can find yourself, it's easy to wander from it. So that's the first thing I would say. So when we look at fund managers to work with, we are always looking at what has been their track record, right? What has been their IRR? What's their ability to attract commercial funds? We have a collaboration with 500 Global that you and I have worked on for some time. That is why we were attracted to 500 Global, is because of exactly its commercial track record. I sit on the board of Factor E, that also, and through them have supported a fund called Equator Fund. Both of those is the same criteria, right? What has been the track record of scaling, of bringing companies to scale and attracting commercial capital? And it's only through that you can achieve commercial long-term success for the entities, but also the commercial leverage we seek. We achieve between 12 and 14x leverage of our money to other money that's brought in, right, on an annual basis. And last year, 84% of that money was commercial. You're only going to be able to do that if you maintain that kind of commercial discipline. Yeah. So, I would jettison all other points for that one.
No, that's very enlightening. And I'm curious as well, I mean, given the change we've seen, not just in the structures, but now the partners that we're talking about, really having this focus on the commercial outcomes. is there ever any tension that gets created when we're trying to bring in perhaps other organizations who are more philanthropic in nature or less commercially minded? How do you all navigate that?
Yeah, I bet each of us has in one form or another come across that.
Yeah.
There is the potential for that tension. We try to remove that tension as much as possible, if we can, entirely, right? Because we do not want to dilute the commercial viability of the entity. That means that we are very selective, right? So we've probably looked at, so there was a wave of environmentally oriented emerging market funds from the world's leading commercial institute, the world's leading institutional managers, many of whom are here at FII, right? We must have looked at 20 such funds from really global brand name, top tier managers. We got down to 2 that met our impact thresholds out of some 20 absolutely top flight organizations. So for us, it's a matter of selectivity. But once you've been selective, you have to make room for the commercial viability. You have to get out of the way.
Yeah, no, that's really.
I'd be interested to hear what my colleagues.
No, I completely agree. I mean, I think that we try to really stay away from. I was mentioning to Jonathan from FAD. I want businesses to outlast us as FEDA, and so especially when it comes to climate smart technologies, we see a lot of people being attracted by the fad. We want it to be long lasting, and so we really look before we make an investment at the economical model, the viability of it from all of the stakeholders' perspective, to ensure that it sticks, and that's what we want. Obviously, there's always room for people who have more flexible capital, more concessional capital. That's always very welcome, but it will always be structured with the approach of making the business strive, making it successful, so that is EBITDA positive, self-sustainable, not depending on raise to cover cash burn. We want those businesses to reach that level, to scale, to eventually expand regionally, achieve economies of scale, and just be long-lasting. That's very much something that we focus on. And whoever is at the cap table, we make sure that they're aligned with that vision.
And maybe staying on this point a little bit more, and you're talking about some of these larger plays trying to scale. What sort of headwinds are you actually seeing, in the past couple of years in particular, for some of these startups operating in highly regulated spaces?
I know I'll give you an example of one investment that we just made. So we just invested, we just led a fundraising round for Spyro. Spyro is today the largest electrical mobility company in Africa. As you know, if you've been to Africa, a lot of people still use motorbike as taxis. So Spyro is present in Rwanda, in Nigeria, in Uganda, in Benin and Togo, and has a pipeline of countries where they want to be, and to lead those efforts. And again, as I mentioned, what we looked at is to say we look at those motorbike drivers as micro-entrepreneurs. We want them to increase their income, so they should be able to purchase the bike cheaper. And when they look at their spend, it should be lower than fuel cost. And so that's what we found. That's what convinced us. Secondly, there was the opportunity to assemble the bikes in Africa. We thought that was important to, again, create jobs, value-add jobs for African and businesses that pay taxes on the continent. Then we had to work with an ecosystem to say those bikes need to be financed, so the banks need to play their part. We need to work with government to say when we import those parts to assembly, we need to have some sort of tax incentive, etc. So everybody played their part, but what we like to do at FEDA and at Afrexim is to say, let's be intentional and transformational. So rather than investing into one small company that's local, we have a business model that works. We have fundamentals that are true in Rwanda and Nigeria and Uganda. Let's do it, and let's push it, and let's be bold. That's why we put in $75 million. Wow. And I do hope you will join us very soon as well when you complete your due diligence. But that's what we want to do, because that to us brings the type of impact that we seek, and then build stronger, more resilient businesses as well.
I like the framework you've shared of intentional and transformational. Astria, sharing a little bit more maybe on the startup side. I know you've spent a lot of time taking a grand tour around the continent, really learning kind of what the industries are that are key in particular countries where we're launching hubs. What are you seeing right now that's exciting for you in terms of the actual innovations that are being developed?
Well, I guess before I answer this very important question, just on the potential tension between
Yes, please.
this um, financial, I would say, performance and the more sustainability or aspect. So within UNDP, actually, Bank was incubated somehow within UNDP. And this idea of, sustainability is embedded in what we do. And today, more than ever, the financial sustainability of what we do is super important. So the entire Timbuktu initiative is structured in that way. And also, but also what is interesting is that this tension, I feel, is more and more or less and less important in the sense that I've read a study recently when it comes to impact investing. So impact investing is a complicated space, but more and more when we look at it, we realize that given the level of data that impact investing requires to understand about the business, we can actually achieve higher returns and better returns on the businesses because there are way more improvement points that are identified through a proper IMM impact measurement and management system. So I think there's a world where we can actually really make those two components work together. And it's not that we can, it's that we have to. From my perspective, because I said earlier that Timbuktu is a reform agenda for the UN, but I hope that it also a reform agenda for the private sector and the way those startups that will eventually become businesses will operate in a way that is way more sustainable in every term of the sense, in every sense of the term. And so going back to your question, indeed, as we were designing Timbuktu back in 2021, I had the chance and the privilege to go across about 20 African countries to locate those 10 hubs and make the selection of the hubs and the thematic. And so since we are primarily talking about climate smart technology, what we've observed recently, because once again, as part of our Green Tech Hub that is based in Nairobi, which is actually the first hub where we're implementing this model of partnership with 500 and Shell Foundation, we worked on what we call a strategic roadmap. So we've tried to imagine what would be the best case scenario for the green tech space, the climate space, 10 years from now on the African continent. And what we've realized and what we try to identify were what are the competitive advantages of the continent where we can develop startups that solve local problems, but that can also grow globally and serve the entire world. And right now we are looking at very interesting solutions that are relying on blockchain, for example, on AI, obviously, and especially when it comes to climate data. AI is a game changer, and currently we are in discussion with Mvidia to actually create a green tech AI hub so that we can start exploring all the ways AI can be applied to green tech, right? And what is interesting is that when you look at other region in the world, it's a question that everyone is asking now. So on this space, Africa is not late, if I can say so. We actually have a real chance to make a difference on this topic, and because we also have like a space to test and implement those solutions in a way that might not be possible in other regions when you have legacy infrastructure that can actually slow down innovation and slow down testing of those new approaches. So I'm really, really excited to see how it's going to progress. And so in our batch of startups, we have a couple of them that are actually looking at those solutions. And so that's very exciting.
Yes, we're quite excited, having just launched our first 15 companies going through our program. Jonathan, any comments on that?
You know, reflecting on what Astria was saying, I'll put in a word on the relevance of this to this market, to the Gulf market, right? So first of all, though we're speaking of Africa, and we have been involved in Africa since our inception 25 years ago, blended finance and climate tech are at play across the developing world, right? Our initiatives together span Southeast Asia, South Asia, and Africa, right? And at the center of that region, not just geographically, is the Gulf, and leadership easily flows from here to across the whole global South, right? Not just by virtue of geography, as I say, but by virtue of knowledge of those markets, deep familiarity with those markets that, frankly, our colleagues in the north, in Europe and the U.S. just lack, right? We find our colleagues here have that familiarity, and also with familiarity of experience. You know, Astria just mentioned there's an opportunity here to go past those areas that have legacy, that are held back by legacy. That's the whole story of the Gulf, of UAE, and of Saudi in particular, right? They have proven the notion of leapfrogging, which is often just a theory, right? You see it here. You see it in this very room. Yeah. So to me, the natural leadership of the expansion of climate tech across the global South is here.
Amazing. Well, on that note, I'd like to say thank you for spending the time with us and for the work that you're doing and we're doing together. So appreciate the time, and looking forward to seeing even more incredible investments and impacts being made.
Thank you. Thank you both.
Thank you. Thank you very much.